So welcome to the press conference call for the July edition of the Philadelphia Fed's Business Outlook Survey. I'm Danielle Mazzone, Media Relations Representative, and I'm joined by Senior Economic Analyst Mike Trebbing, who will begin our conversation with a quick overview of this month's survey.
Good morning. Our Regional Manufacturing Business Outlook Survey indicators for general activity, new orders, shipments, and employment were all positive again this month, suggesting continued expansion in that sector. The indicators for each was also higher than the readings in June. The survey's price indexes suggest continued price increases for input prices this month, and price pressures for final manufactured goods showed some creep upwards. Overall, expectations for the next 6 months remain optimistic, and the survey's 6-month indicators either improved relative to June or remained at high levels. Our supplemental questions this month focused on the contributions of exports to sales growth, and firms indicated that exports continued to lead growth. And I'll answer all questions that come up.
Lorraine, do you want to begin?
Thanks. I mean, you talk about prices, any inflation pressure, or is this just healthy growth in prices? I mean, how would you characterize it?
Yeah, well, we've seen some rise in the prices paid index over the last 3 months, although this month just a slight modification or moderation in the paid index, but it has risen over the last 3 months. A lot of this probably has to do with energy prices that tend to be transitory. And on the receive side, we focus on not only the diffusion index, but the share of firms that are reporting stable prices, and we're still up around 72%. So although we've seen a little bit of a bob up in the overall index, the price pressures are moderate compared to other periods. So and could be associated with also stronger growth. Demand seems to be picking up, and firms, the base of firms that are growing seem to be expanding over the last few months.
Okay. So nothing alarming or bad.
No, and in terms of the comments, we had a few comments about the type of material cost increases, but nothing that came up over a large number of firms. So a normal reporting, I think, in the comments relative to prices.
Great, thank you.
Mm-hmm.
This is Beth. Michael, could you just explain a little bit that 72% reporting stable prices? What do you mean by on the receive side? Stable prices, explain the stable prices, what do they refer to?
Sure. We've asked, since 1968, we've asked the same question about whether the changes in prices paid, which we define as all of the costs associated with production. You can think of it as like an index or basket of input prices. And then we also ask about their prices received, which is the average of their final manufactured goods prices. So we distinguish between the input prices and the output prices, and typically we see higher diffusion indexes for the prices paid, although we don't always see the same share of firms that are reporting increases in the final goods prices. So the distinction is between the costs of production and what they're actually receiving in the market. And the 72% is just the share of firms that reported this month the steady prices compared to June. So it's just a one month comparison, if you will.
So 72% basically said they're not raising their prices, and what percent said that they're paying more for their inputs?
We had about 36% of the firms this month that indicated some rise in input prices. A negligible 1% indicated price reductions. But if these are energy related prices, we'll probably see that number bound up in future months. So we look at the the combination of the increases and the decreases, and then compute the index for that overall measure of prices.
Can you just talk, Michael, big picture? What is this? What is this saying? Basically, this is an continued optimism. What is this basically saying to us about the strength of the economy and the future?
Well, for the manufacturing sector in our district, at least, we've had 5 months of positive readings on all the general broad activity indexes. And this month in particular, an improvement in the new orders, which would suggest, higher demand for manufactured goods. So we look at the overall balance in terms of the diffusion index, and it's saying continued expansion through the summer so far. And then we also ask about 6-month forecast, and we have very high readings on 6-month outlooks. With about almost 60% of the firms expecting growth in activity over the next 6 months, and about the same, about 56% expecting expansion in orders. Although it doesn't translate for all these firms into expectations of increased employment, we still have about a third of the firms indicating that they expect to expand their payrolls, and a very, very slim percentage, just 3.5%, saying that they're going to cut back on employment. So overall, good numbers for expectations of orders, activity, and about a third of the firms expecting to grow their payrolls over the next 6 months.
And what is your what do you think is the significance? How do you react to the exporting question?
We've known in the past that exports have been a way for a lot of these firms to grow, and indeed the same thing. We found that about 39% of the firms said that their share of total sales attributable to exports had increased. A smaller share, 7%, said that it had actually shrunk as a share of sales. So although most of these firms indicated that the share increase was moderate over the last year, but still exports are contributing to the growth of the firms that are exporting. We had about 80% of the firms this time indicate that they were in some export business. And just for our information, we also asked them about the kinds of products that are being exported. And the table in the survey indicates the distribution of product types, with the largest share being export of intermediate products for further use in other businesses, we assume, and followed by final business products, about a quarter of the firms, and about a fifth of the firms indicating their capital goods, and the smaller share, 11%, being final consumer products. So it gave us a good picture of exports among the reporting group. We know from past surveys that exports represent between 10 and 15% on average of most of our reporters here in this group.
Okay, great. Thank you.
Sure.
Lorraine, do you have any follow-up?
No, I'm good. Thank you.
Well, thank you both for calling in. Our next survey will be released on Thursday, August 21st.
Okay, great. Thank you both.
Thanks.
Thank you.
Michael.